This meeting is being recorded.
Good morning, everyone. Welcome to Journey to Home Ownership. Thank you for joining us this morning. This presentation is going to take about 30 minutes, and then we will have time for questions at the end. So I'm going to start sharing my screen so you can follow along with us. There we go. So let me introduce myself. My name is Maria Sheler-Edwards. I'm a realtor with Real Estate One. My office is in Ypsilanti on Huron Street, across from the big post office. I've lived in Washtenaw County for about 35 years. Real estate is my second career. I spent the first part of my career doing public relations and marketing, which turned out to be a really terrific experience for selling homes. And I met Leanne a couple of years ago in a women's networking group in Ypsi, and I really appreciate her focus on education when she's working with buyers. So we decided to team up to do a webinar today.
Great, thanks, Maria. I really enjoy working with you and your clients. It's always a wonderful experience getting to know your clients and working together so closely. So my name's Leanne McKeon. I work with US Bank. I live here in Ann Arbor with my family. I do have an office over on South Main Street, right across the street from Bush's. And it's a great location for meeting with clients. So in the mortgage industry, I'm what is considered a veteran. I've been in the business for a long time, and I've held many different positions in banking as well as mortgage lending. And I have to say, by far, my favorite part of my career has been working with buyers and helping them to strategize and maneuver through the whole loan and home buying process. So thanks for allowing me to share a brief overview today of what that looks like, and getting to, being able to share some tips with you along the way.
So here's what we're going to cover. This is just going to be a quick overview. There's more information that we can share with you one-on-one or after the webinar is over, but here are the points that we're going to hit today. So first, we're going to talk about your team, realtor, lender. We'll cover how much you can afford and finding the right home, what the process is once you found the home, the loan side, and then your move-in date. So first thing is finding the right professionals. I'm a realtor. I work with people who are buying and selling. And it's really important that you feel comfortable with your realtor, because we work really, really closely throughout the process. So when you're looking for a realtor to help you with your transaction, you want to make sure that it's somebody who's accessible, who communicates well, someone who you trust, and someone who's really familiar with the market. You might want to ask for testimonials from your realtor to find out how they work with clients. One important thing for you to know as a buyer is that my services to you are free. My commission is paid by the seller.
Cool. So the other professional relationship that's so important is finding the right lender. And, it's so important to have, the right lender that has a good reputation, someone who can offer multiple loan options, and then share and provide personalized guidance throughout the process, and someone who's available and responsive. It's finding the right lender relationship. It's just as important as finding the best loan program and interest rate. And I know we all hear the different ads on television about all the wonderful technology and, click here and get a mortgage, and that's wonderful. But behind that technology, you really need a person that can help guide, direct, who's responsive, and can really be there for you during the process. So, one of the first steps in this whole process really is understanding your budget and how much you can afford. And people use the terminology pre-qualification and pre-approval. Pre-qualification really is the very first step in the whole home buying process for mortgage financing, and that is a conversation. It's a hypothetical scenario. I'm thinking about buying a home. Can you tell me a little bit about what a payment might look like? And that's really the first step. I call it kicking the tires. The pre-approval, though, it's a little more in-depth. This is where we verify your credit. We have you complete a loan application online. We verify your income and your employment history, and give you kind of a general idea right out of the gate what kind of a loan program will fit your circumstances. It's really, an important part of the process, and understanding what loan options you have available during this process is it's worth the time invested. So choosing the right loan that fits your needs is one of the things that we do. There are different lending options. The most popular is a fixed rate mortgage. It's nice to have a fixed rate mortgage because the payment just remains the same. The mortgage portion of it is your payment, that is, for the entire term of the loan, which could be 30 years or 20 years or 15 years, just depending on what loan program you decide you want to go with. Another popular loan program is what's called an ARM, or an adjustable rate mortgage. This is a great loan to use if you know you're not going to own the home for more than maybe 7 or 10 years. The benefit to this particular loan program is that it is a little bit lower interest rate than a fixed rate mortgage. So it makes the payment lower during that time frame. So if you think you're going to sell the home in the next few years, or maybe you have an inheritance or something where you're able to pay off the mortgage, it's a great tool or option in home purchasing. Some other programs that are available are FHA, it's a Federal Housing Administration loan. It has a little bit of flexibility with credit and the cash for down payment. It's a great loan program. Also co-signers, it allows for a co-signing type situation. The other loan programs are more specific to the person or location. There's a VA loan, it's a Veterans Administration loan. Qualified veterans are able to purchase a home with low to no down payment. And then the final program that's lending option that's available is what's called a USDA loan. Or a rural housing loan. It's a low down payment or zero down payment loan program that allows for, or the program itself has specific maps and criteria for location to be able to utilize this financing. It's not necessarily a farm or way out in the boonies. It's meant to be more, again, the way the maps are set up, it's less urban areas. So the last two loan programs I talked about, one is specific to the person, the other one is specific to the location as far as the property. Big mortgage myth that I hear as a lender that I like to dispel is that people want the absolute lowest rate possible because that will have the biggest impact on their monthly mortgage payment. And actually, that's not always the case. The biggest impact really on a person's mortgage payment is their credit score. So I've provided a slide here, a sample of what that looks like. You'll see I'd like to start on that far left column. This is based on just a sales price of $100,000, someone putting 5% down, borrowing $95,000. So it's just a sample, but a credit score of 740, you'll see there's an interest rate column, a PMI column. This is called private mortgage insurance. It's a required insurance coverage that you pay each month until you gain a full 20% equity in the property. But you'll see the difference between the 740 credit score, the next line down is a 680 credit score, And the total payment, the difference in the payment based on those credit scores is significant. 620 is the final credit score sample. And you'll see the PMI payment on that one is $108 versus $19 for the 740 credit score. So really credit plays a huge role in mortgage qualifying. Let's talk about credit scores and what goes into that credit score. I always like to share this information because there are a lot of, I guess, there's a lot of bad information out there whenever it comes to credit. And I like to share really the nuances of what a credit score looks like and what goes into that, that credit score factor. In this slide, you'll see the payment history makes up 35% of your credit score. That is a common, make your payments on time. It's going to positively impact your credit score. Debt is the second one. And what that means is utilization of available credit. So I use the example, if you have a $10,000 limit on a credit card and you don't want to utilize more than 30% of that available credit, that has a big impact on your overall credit score. Also, if you have multiple credit cards, maxing out even one of them can bring your credit score down. So it's good to utilize less than 30% across all of your credit card debt. The next one is credit length, and that makes up 15% of your credit score. And sometimes people think, I've had this account for 10 years, I haven't used it, I'm going to close it. That can actually drop your credit score because the history of your credit and length of credit, utilization really plays a big role in your overall score. New credit would be credit inquiries. So if you have multiple credit inquiries for different types of credit, that can impact your score in a negative way. And then types of credit makes up 10% of your score. So this would be installment loans, credit cards, mortgage. That has an impact on how your credit score is assessed. So I always like to share this pro loan tip. Also, it helps speed up things. So if you do have a frozen credit report, it's called, or you've frozen any of your bureaus because of previous security breaches, it's really important that you remove that credit freeze during the loan process so that we're able to update your credit. You can never start this process too early. It's so important to, get your credit report and pre-approval started as soon as you can in the home buying process. The way we do that, it's just a brief phone call, and I text or email over a secure link that you're able to complete a loan application. It's all done electronically. I can also assist during the process. Some of the questions people get stuck, I'm able to kind of walk through what those fields might look like. It takes about 15 or 20 minutes, and we can always meet in person too if you prefer that.
That's such great information. I personally didn't realize what role your credit played in your payment. So I'm really glad that you were able to explain that, Leanne. So now you've got your pre-approval and you know what your budget is. You can start looking online for homes that might meet your needs. Probably already done this. One thing I do want to point out about using Zillow and Trulia is that they might not have the most up-to-date information. So you might find a house that looks absolutely perfect, but then once you ask for more information, it might already be under contract. So as a realtor, what I can do for you is set up a search that is connected directly to the MLS, the multiple listing service. And that way you'll get notified immediately when anything new comes on the market. Once you sort of figured out where you want to live, I always like to tell people, drive the area, look at the neighborhood, different times of day, evening, You'll get a vibe for what it would be like to live there. If you've got kids, I like to recommend that you visit the schools yourself. Go visit your public school, talk to the teacher, talk to principals, do your own research. I find that people tend to look at about a half dozen houses or so before they really start to hone in on what's going to work for them. I think when I bought my very first house, I looked for a year. I looked at a lot of houses, partly because I like looking at houses. But you need to take the time that it takes for you to feel comfortable when you're looking. But just bear in mind, no house is perfect. I like to tell people about the 80-20 rule. So if you find a house that has 80% of the qualities that you're looking for, and you can either change or live with the other 20%, that's a keeper. So you found the house, you want to make an offer. How does that work? Well, there's a lot of paperwork. The first thing I'll do is I will send you an agency agreement and our disclosure. So the agency agreement just establishes our working relationship. So I will represent you as the buyer in your best interests, not the seller. I keep your information confidential. The disclosures talk about the different things, different companies that my company owns, things like that. That's the first part. The second part is the purchase agreement. And this lays out the terms of your offer. So how much you're offering to pay, various contingencies, financing, inspection, appraisal, that kind of thing. It will include how much money you're willing to give as an earnest money deposit. We'll talk about that in a second. You'll also get seller's disclosures, and these disclose various things about the home that are important for you to know, like the age of the roof, the furnace, the condition of the home in general. You'll have to initial those to show that you've received them. And then we want to have that all important pre-approval letter. Because as I said, it's a competitive market and you want to present yourself as a serious buyer. There are a lot of strategies in this market for putting together an offer that's going to stand out. Homes are getting multiple offers on a regular basis. And sometimes it just comes down to money. How much can you offer? But also there are other things that we can include to make the terms more favorable to the seller. And one of those things is who your lender is. It really does make a difference if you're working with a reputable, established local lender. Listing agents always want to know who the loan officer is.
Yeah, I like to reach out to the listing agent as that offer is being presented and let them know I've chatted with and pre-approved the potential buyer, and just check in with them and make sure they know we've done our due diligence and that the buyer or you as a buyer are well qualified. Oh, I always like to, and I remind folks too, as you're making an offer and even before that, keep a folder on your laptop or your computer, your phone, whatever it might be. Just put all your updated bank statements and pay stubs in that, so that whenever we actually make an offer, we're ready to go. We have all the paperwork in order from the lending side as well.
So we wrote a great offer and congratulations, it was accepted. So what's next? This is the beginning of what we call the escrow period. So escrow is starts the day you get your offer accepted until the day you close. And that takes 30 to 35 days. Just keep that in mind for your time frame of when you want to move. When all the signatures on everything are finalized, I hand the whole packet over to Leanne and she starts the financing side. So from this point, your transaction is going to take place on parallel paths. You'll have the property side of the deal, which is what I handle, and then you've got the financing side of the deal, which is what Leanne handles. And so on the property side, the first thing that we do once your offer is accepted is I collect your earnest money deposit. That's often abbreviated as EMD. That's about 1 to 2% of the purchase price. This comes out of your down payment. This is not on top of your down payment. You submit it to to me. I hold it in escrow with my company, so this seller doesn't have any access to it. And this effectively just takes the house off the market, and shows that you're going through this process in good faith. If on the slim chance that the offer, the transaction somehow doesn't go through, in the vast majority of the cases, you get this money back. So the next thing we want to do is we schedule an inspection on the house. This is a really important step. Do not skip it. Sometimes people are tempted to skip the inspection to make their offer more competitive, but it's really important that you have a full understanding of the asset that you're going to purchase. So I can help you find a good inspector. There are a number of great people that I work with in the area. We usually do that sometime in the first 7 days. So, and there are different kinds of inspections. So you'll have a home inspection. I often recommend a sewer scope. So they send a camera down through the sewer and take a look at the sewer line. I always recommend a radon inspection, a radon test in Washtenaw County. That's really important. You've got radon all over the place in Washtenaw County. And then sometimes you'll want to have a pest inspection too. So all of these things together will cost between $500 and $700 or $800, and that's something you need to be prepared to pay out of pocket at the time of the service. So once you've had your inspections done, sometimes that brings up issues. It's a point at which we can go back to the seller, maybe renegotiate the terms, we finalize the terms, and then you move on with your financing.
Yep. Yeah, the next step, once you've done all of that, we make sure the property is good to go for you. You're comfortable with the purchase. I review the purchase agreement as a lender. I check all the dates that are written into the contract to make sure we have everything in line from the lending side. I also review if there are any addendums. Maybe there's a seller credit or something along those lines, so that I'm able to account for that on my side of the process. So again, we received the purchase agreement. This is when the clock starts ticking for the loan. We convert that application that you had from pre-approval status to full ready to go status. We order an appraisal. This is the next big step in the loan process. The appraisal is an assessment. It's a market analysis of the value of the home. And it's a report that we order it from a third party, a neutral third party. It usually takes about 7 to 10 days to get the results of that report back into our hands. We always send a copy to the borrower, so they're able to review. The appraisal itself is really good information. It shows what homes similar to the home you're purchasing in your area, neighborhood might look like, or what it's a history rather of what homes like yours have sold for. And it's to make sure that what you're paying for the home is really market value, that it matches what the market supports what you're paying for it. We then start the underwriting process. The underwriter is going to start reviewing paperwork that you've provided. Our next slide, I think we'll talk about in more detail. Again, we've converted your pre-approval to an application, ordered the appraisal. The next on this bullet point is title work. We sometimes kind of, at least in my industry, we forget how important the title is to the property. And it does two things. One, it provides a direct line of ownership that you as the potential owner of the property are the only owner, that there are no other people before your closing or purchase of this home that have rights to the property. So it's to make sure that you are the sole owner, and also that there are no liens on the property. That would be, that could impact your obtaining of a mortgage. We need to make sure that the loan that you're getting with us will be the only loan on the title. So during this process, we review title work, the appraisal, we verify employment. We make sure that your employment you are employed, and the income that you've provided, the information, we document that your income supports making the mortgage payment. Underwriter also during this process reviews your credit, make sure your credit that we started with matches today, so that again, you're qualified for the mortgage. We also verify the assets that you're using for your closing and for down payment. If it's a gift, we have to document that you've received the gift and it's available for the closing to meet that deadline or timeline as stated in your purchase agreement. This is also during this process, something that you get to do is shop around for homeowners insurance. And most folks will contact their, like whomever their auto insurance is with. You can bundle insurance, but it gives you a chance during this process to kind of shop around, find really good coverage for the home that you're purchasing. So we're going to go through a few tips. Maria.
Right. While you're in this escrow period, it's really important that you stay current on all your accounts and continue just using your credit the way you normally would. Keep your bank accounts in good standing and make sure you are building a history of the way you use money by depositing income into your bank instead of cashing checks. So you want to be able to document that you've got a steady stream of income that's coming in.
Mm-hmm. Yep. Those are, yeah, very, very important steps and tips for sure. And a few things to avoid. You want to avoid applying for any new credit or co-signing for anyone. Also, whenever it comes to your bank accounts, try not to transfer money around or, you know, from one account to another account. We have to document everything, that it's your money that's being used for closing. Another really important piece, please don't quit your job during the loan process or make big career moves. We have had where folks maybe have been offered a promotion somewhere. That's fine, we can do it, just let us know. But it's really important to avoid quitting a job. So the final steps. Your loan's approved. We have everything ready to go. You need to finalize your homeowner's insurance. We as a lender, before we can release the closing documents, have to make sure your credit and employment are still the same as when you applied. We have a team, a closing team that works on the final numbers. They work directly with the title company and audit and make sure that all the money is accounted for. So the deposit you've made, it's been held in escrow usually. That deposit is credited to you on this final closing disclosure. Any money that's owed to the seller is disclosed, and it's just all put into one piece of paper, or well, it's more than one piece of paper, but one document in disclosure for the actual closing. At this time too, you're going to want to decide if you're going to wire your money to closing or if you're going to bring a cashier's check. There's some very specific instructions around that in this day and age, and we kind of keep you informed of what those steps are. And then Maria, we will.
Yes, we will walk through your house one more time. This is really important because we just want to make sure that the house is in the condition that you expect it to be in. We want to make sure that all the appliances that were included on the purchase agreement are still in the home. Nothing's been removed, no major damage, no minor damage. We just don't want any surprises. So we do that 24 to 48 hours ahead of closing. Then once we get to closing, your funds are already either there because they've been wired, or you're bringing that check. You'll spend about an hour in your closing appointment. Bring your signing hand. There's a lot of signing to do. And then you will get your keys and you own a new home. So we just wanted to run through a couple of examples of what this might look like in real life. We've got a home here at a $150,000 price point. This house is on the market right now. This is a typical home for $150,000. you are going to bring your down payment. You'll have a charge for your insurance, and then you'll have some closing costs, which are usually 3 to 5% of the total amount. So for a house that's $150,000, I mean, $150,000, you're going to bring around $9,500 to closing. That means your monthly payment is going to be just over $1,000, which is a lot less than rent would be for a similar home.
Yep. And I just wanted to touch on the closing costs and what that is. So the down payment, we know 3% insurance is your homeowner's insurance. You need to purchase that for 1 year coverage. And then closing costs consist of actually two different sets of numbers. One would be the companies or third parties that have done work to make this loan happen. So such as an appraisal, and the title company charges some different fees as well as title insurance. So that closing cost number, it's pretty much going to fluctuate depending on how much your insurance is and how much your escrow, or I'm sorry, how much your property taxes would be, because part of that closing cost is also setting up an escrow account for when those taxes and insurance come due next year.
So notice the taxes here on this property in Escrow Township. We're going to now look at an example in the city. This is a house that sold for $200,000. Taxes are a little bit higher. So we just want to point that out. When you're looking at homes, city taxes are typically higher than township taxes. The trade-off is that in a city, you're probably closer to amenities, shopping, schools, hospital, that kind of thing. In a township, you might be farther out and we'll have to drive in. The other thing is, in a township, sometimes if you're way out, you might not be on city water. You will have your own well and septic. So the other thing to know is that once you buy the house, your taxes will uncap to reflect the new value of the home. So this only happens once. And then the amount your taxes can go up from that point is limited by law.
So that's really helpful information to have as you're budgeting for your mortgage payment or your total housing payment over the next 12 months. I like to also, with Maria, we like to show what that payment probably will look like with that increase in taxes. Sometimes it's minor, you know, it might be that it's not that big of a number, but if it's a home that hasn't transferred ownership in 15, 20 years, the taxes might be that jump might be something you'll want to budget for.
So that's really it. We wanted to give you this quick overview to show that this is really very doable. And in fact, you've already begun the process because you've watched this webinar. So you've met a couple of professionals in the industry. Leanne did a great job of talking about how you get pre-approved, what goes into that. You know the steps for finding a home, making an offer, how long the financing takes, and then you too can be holding the keys to your new house.
Yeah. Yeah, thanks so much for joining us today. We really appreciate your time and look forward to answering any questions you might have about achieving homeownership.
Thanks for joining us.